In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hello everyone, and welcome in to Eye on Retirement. I'm Matt Goolsby, financial advisor and your guest host this week. Rick Everett's taking this week off. Today we're talking about big life changes and how we deal with them here as a team. That's exactly why we've gathered this team of professionals for this episode, and today our panel includes Joshua Cicora, lead CPA from Market Tax Services, Alex Robinson, estate planning attorney from Eidelman Law Firm, and Cory Hiebert, health insurance advisor from Market Medicare Advisors. Welcome in, everyone. And you know, this is someone that I actually met with. It's a family member of a client that I've been helping for about 2 years now, and she doesn't live near any of our offices. And we actually got to have this meeting virtually. And if you guys are out there watching, if you don't live near any of our offices, you can have this meeting with us just like Lucille did virtually. And Lucille is a woman I just met with, like I said, virtually, recently separated or divorced. She lives in Illinois, and her kids are older but still in school. She's started a small business this year. I mean, that's kind of cool, and on top of everything else she's doing. She has an LLC, and she's doing the best to keep her banking separated from her personal expenses. That was kind of the advice that we gave her. She's been flying for the military for over 20 years, but recently started flying as a pilot for Southwest Airlines. And so this has just been such an interesting story here. I wanted to share that with you guys this week. But she really wanted to say, should I be doing anything this year with my non-qualified investment account? Or is there anything I need to be doing before the end of the year? Because my mom and dad, who are clients of you guys, they've gone through this tax planning with you guys 2 years now, and it's been very beneficial for them. The daughter's now saying, what tax planning benefits could she be receiving or maybe taking advantage of?
You know, it's always great when you hear that people are talking about the things that you're doing outside of that meeting, right? So she shared with us that she had conversations with her parents about what they were doing, and they spoke so highly of us, and that just, I don't know, meant something to me. And so when we started talking to Lucille, we kind of had to start picking apart her situation. She mentioned, I think as you talked about, that she was recently divorced, the ex-husband had done the taxes. So she was kind of getting into this territory that she knew was going to be a bit of a mess, and she didn't necessarily know which way she was going to go. And so then that's when I started just talking about how like the taxes are going to work, how the business plays into that, you know, these different pieces of income all coming together, and how the tax planning process fit into that. And her tax planning process was going to look different than her parents, and really everybody's looks a little bit different because it's always customized to what someone has going on. And so while she may not have the retirement things going on that her parents do, we needed to talk about what her business was doing, the results of it out of the business, talk about like you said, keeping those personal expenses and the business expenses separate so that we could start to figure out what income was looking like this year, so that if she wanted to do something with those non-qualified accounts, we could then start to predict what the tax impact was going to be. But it's all these different pieces coming together like a puzzle, and trying to get them all to fit together and fit together right.
Well, and as a financial advisor, I'll get asked the question oftentimes of, is there anything I need to do on my taxes? I'm a business owner, and that really is an area that I can't speak to because I'm not a CPA. So that's when I go bring you guys in, and you help us walk through the things that a business owner can deduct or things. But like you mentioned, the non-qualified brokerage account, that was one that was worth you and I working together on. And the challenge, I think, of why I believe the retirement system's broken out there is as the client has these investments that have taxable things going on, but you could harvest some gains. You could actually even maybe harvest some losses and reset your cost basis, do some neat tax planning. Mm-hmm. But the challenge is, because the retirement system is broken out there, the client has to go to their tax person, mm-hmm. which maybe doesn't do tax planning. Yep. Maybe they only do the preparation part. And then they have to take that information back to the financial advisor, but really it needs both of us working together in the same room.
Right, and I got bad news. The tax process is not any better than that. These things all have to be done before the calendar year closes out, but you don't ever have all that information at that point. And so these conversations are so important to walk through things.
And if you're not having these conversations, working with a team like this, it allows for stuff to fall through the cracks. Mm-hmm. It allows for you to miss opportunities. And we're going to talk about how she has an opportunity because of her military service career. She has a benefit that's eligible to her that can actually not even cost her anything out of pocket oftentimes, right?
Yeah. And it's very specific to the military benefits.
Sorry, we'll be talking about that later in the show. I don't want to get ahead of myself, but this team approach here is so valuable because it helps people have clarity on their picture. Because if they don't do this, then it's their responsibility to go to all the professionals and try and find some clarity on their own.
And even if they get all the answers, these things are so technical that you could be given the right information, but then because you don't understand the language of it, pieces get missed, but it's all on you as the account owner, as the business owner, as the recipient of the income to make these pieces fit. And it's when we're all sitting around that table at the same time that you understand the things I'm saying, I'm understanding the things you're saying, and then together we translate it all into action for the client.
Kind of tying into our listener, viewer question here later, but small businesses, when we help them with tax planning, they can have this picture, but we have to have their bookkeeping up to date. If their books aren't up to date, tax planning doesn't work very well.
Right.
And if we're helping them with this whole picture, it helps them realize the opportunities maybe they have on this side of the tax year, because more often than not, people find out when they go file their taxes that they missed an opportunity.
It's too late. You can't do anything at that point.
And it's tragic because that's what we want to do. We want to help people avoid those costly mistakes in retirement by getting the information before something they miss or worse yet, costs them more in taxes.
That's right. One of the things we say all the time is if we know something's going to cost you thousands of dollars, when do you want us to tell you about it? Now or when you get that bill?
And oftentimes, or more often than not, it's they want to know about it before it happens.
That's right.
I have had a sweet gal say, just don't give him bad news. I never want to get bad news. So, but have you ever been in a meeting with your financial advisor, and when you've asked a question about estate planning or taxes, and they say they can't answer it, but they can refer you to someone else, then you have to make another appointment for another meeting at another place across town. And it's convoluted, it's messy, worse yet, it's wasting a lot of time. Shouldn't there be a better way? At Market Advisor Group, there is. We have financial planners, tax advisors, estate planning attorneys, and Medicare or healthcare professionals, as well as life insurance specialists, all in the same location to help you get answers to the questions you have in real time. And all it takes is a 15-minute introductory call just to have a chat with us to learn if Market Advisor Group is the right team for you. So go ahead and set up that 15-minute phone call and just dial 833-MAG-REPORT. That's 833, the letters MAG for Market Advisory Group Report. Or you can visit our website at eyeonretirement.com to schedule there. And also check out our past episodes, and we focus on different client stories where retirement went wrong. Well, stay tuned. In the next segment of Eye on Retirement, we continue this story with Lucille's estate planning. Stay tuned.
Out on the water, there is a moment. Perfect synchronization. The team working together in harmony to reach their goal. Now, imagine finding a team of financial professionals to help run your course down the river of retirement. Market Advisory Group is that team. Financial advisors, tax professionals, estate planning attorneys, and Medicare advisors. All in the same boat. If you don't have a team like this in one place, it can become a hassle to relay information between them. When you come to Market Advisory Group, we bring everyone together for you. To get you answers in real time. To help make sure you don't miss something that puts your unique plan off course. you shouldn't be the one doing all the work to keep your retirement on pace. You should have a team in the boat with you. Your voice telling them where you're at, where you'd like to end up, and how you want to get there. And at that point, everyone falls into sync, all pulling in the same direction, toward the same purpose. Your retirement's financial security. We are Market Advisory Group, proud sponsor of Shocker Rowing.
Welcome back into Eye on Retirement. Today we're talking about Lucille, a woman, actually a daughter of a client, a couple that is a client of mine. Sorry, excuse me there, that I met with virtually. And she has a lot of life changes going on. She's been recently divorced and she's still working. But one thing I was immediately worried about was, how does this divorce impact her estate plan? And I'm going to go over to Alex Robinson from Eidelman Law Firm. As a financial advisor, me thinking, you know, gosh, how does this impact my client's estate plan? Normally, I'd just have to refer them to someone, right? But no, that's not the case here. We're all meeting with her now, and we're doing this. But divorces, deaths in a family, remarrying, that all is a life event that can have an impact on an estate plan.
Oh, absolutely. Especially when you're talking divorce, because that's not someone that you want to have on your documents anymore. And luckily in Illinois and in Kansas, there's statutes that say those people are automatically no longer part of your documents, whether they're being revoked, whether they're being treated as predeceased, which some people might like.
Yes, I was going to say, I know some people that would prefer their ex-spouses to be deceased.
Right.
But and so that's good news that if you get divorced and you haven't had time to update your estate plan, God forbid something happens, but then you want to update your estate plan because probably your power of attorney is maybe your spouse, right?
Right. And not only that, there's those same statutes also say that third parties can rely on those documents and they're not going to get in trouble. So an ex-spouse can go in and say, hey, something happened, I'm her power of attorney, I need to get access to these accounts. And the bank or the financial institution are going to be covered, so they're not going to do any research on it, and they're just going to take their word for it. So you want to reach out and tell your financial institutions, hey, this person isn't on these documents anymore. Make sure you don't let them do anything, and here's the new document.
That's a good point there with that. I mean, that didn't even occur to me in this situation. I haven't had a chance to tell her that, but that's not even really my job to tell because I'm the financial advisor, right?
And that's something that a lot of people are going to miss because they're not trained in those areas. And so when someone gets divorced, a lot of times that feels like the finish line. That feels like, I'm done. We've got the
divorce decree.
We've got the decree. I don't need to do anything else. My documents say who's going to be the next in line. And that works, but it leaves you open to some bad possibilities down the road if you don't get those documents changed up.
So you're covered, the state has you covered, and that's good to know, but you still want to get those things updated. Why would be a quick reason why you'd still want to get those updated if the government has those rules and it's covering them?
Well, again, it's that they're not posted anywhere. So there's not a website that people can go to and say, oh, you know, Lucille changed her beneficiaries, Lucille changed her power of attorney. So you have to be proactive about getting those out there, because if you've already given a power of attorney to someone or someone knows, then you need to make sure they know that the former one's been revoked and there's a new one in place.
But then if you have this plan, I mean, Lucille still has kids that are in school, they're not yet adults yet. You might want to look at maybe a trust there, right? Because if something happens to Lucille and the kids are still minors, their other parent, the person you divorced, they're going to have access to these funds.
Right. And you probably don't want that. Some people are in that situation where they co-parent and they're doing great and everyone's on the same team. But most people I've found want to have someone else be the trustee, someone else that's in charge of the money, and not give that that ex-spouse access to those funds
or
whenever
ex-spouse
possible.
full control of the things you didn't want them to have full control of.
Right.
Well, let's turn to Lucille's healthcare for a moment. Cory Hiebert with Market Medicare Advisors, and you deal with more than just Medicare. You deal with all types of healthcare. But what did you see in Lucille's situation that maybe went, and you think about when it comes to her healthcare coverage?
Yeah, so for starters, Lucille, if you're out there watching, we know you're very far away from Medicare age. So we're just doing a lot of very extreme planning here, way out. But whenever I was asked about how the healthcare aspect was going to tie in here, the first thing that I saw was that Lucille is a veteran, and she does have access to the VA and different services through TRICARE. So I wanted to just take the time I had here today to really stress and emphasize that we can't make decisions when it comes to our Medicare or our different healthcare options that we look at based on what our neighbor did, based on doing exactly what our parents did, because everybody's situation is that much different. And in Lucille's situation, having that TRICARE for life, whenever she does turn 65, and learning about how that is going to interact with Medicare is so much different than anybody that's going to come shopping off the street for their Medicare benefits. A lot of times you hear that people will say, well, you need to get a Medicare supplement. And I've seen people come into my office before that have Medicare A and B, TRICARE for life, and a Medicare supplement. And what they've never realized is that the supplement and TRICARE for life are doing the same exact thing. So now how many years have we been paying for this policy that they really didn't need, but they got it because, well, my mom had a Plan F, so I wanted the Plan F, and I signed up for what they did because their coverage was great, when all along they've had great coverage and they didn't need to pay that premium.
Just to be incredibly transparent here, I'm only understanding about every third word you're using because you're using a lot of acronyms and things that, this is why we have you guys. I mean, it's like watching a dog talk. I mean, I don't really understand what's going on here. All this stuff can get so complex. You know, income affects Medicare costs, taxes, and estate planning. There's a push and pull to all of this, and it can siphon money off your nest egg if you don't have a team working together. At Market Advisor Group, we are that team. To set up your 15-minute phone call with us, just call 833-MAG-REPORT. That's 833, the letters MAG for Market Advisory Group Report, or you can check out our website at ionretirement.com. There you can also watch past episodes where Rick's hosting and probably doing a better job than I am right now, or submit a question for us possibly to answer in a future episode. In fact, we've got a question coming up here in the final segment. So in the next segment of Ion Retirement, we'll go back to the panel to talk about this viewer question that we have, and we'll be right back right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. We'll start with a full-blown analysis of what you already have by running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
Hi, and welcome back into Ion Retirement. In this last segment, we're going to look over a viewer question, like I said, right there before the break, that you can submit on our website. I think this viewer question has a lot of implications, and this isn't a question for just one of us. We're actually going to go around the panel here. I think we all might have some different viewpoints on this, so feel free to jump in as we go down the line here. But the question comes from us from, I believe it's pronounced Davian. Davian M, he asks, what is the best way to retire as a business owner? I'm going to answer kind of a smart aleck one here and say, Rich, that's the best way to retire as a small business owner?
Yeah.
It's not always
agreed.
so, but we'll start off with Joshua Cicora here. What tips or how would you answer that question for Davian?
I think from the tax and accounting perspective, have a plan. And have a plan early. So then that plan can include saving for retirement through the different vehicles that may be available to you as a business owner. And then start putting together a succession plan for the business. What are you going to do with the business when you're done working? Is there someone who's going to take it over? Are you going to sell it? Are you going to just cease operations? And then have a plan together with what that getting rid of everything looks like. You know, what do you have in the business for assets, for cash, things like that, and what's that transition plan going to be? It's all about having a plan.
And if you don't have a plan, how do you even know what decisions to make? So that would be my advice to the business owner. I mean, no matter where you're at in your age, I would say, like Joshua, echo his comments. Make sure you have a plan and consider alternative investments besides your business. For a long time, I was only putting my retirement into this business, but just like you want to diversify your nest egg, you don't want all of your eggs in one basket. And make sure you're diversifying. As a business owner, we can get laser focused on our businesses, and that's actually a good thing. You want to do that. That's your passion. But make sure you're working with a tax team, because as a business owner, I'd say make sure you're getting tax advice from someone that knows taxes. I've heard of people just putting like a third of whatever they make in a checking account, and that's their estimation for taxes. It's better than nothing, but you need something more specific than that.
There's better ways to do it, yeah.
And thank God you're in my life. Oh my gosh. Alex Robinson from Eidelman Law Firm, maybe what would be your advice about a small business owner that's looking for retirement?
I mean, anytime I hear a business owner, I think small business owner. And a lot of times what they're wanting to do is pass that business on to their children. And a lot of times those children don't actually want to be able to continue the family business, whatever it is, whether it's farming or owning a pharmacy or something like that. And so you want to have your trust set up. Hopefully, if you're a business owner, you've got a trust set up. You want it set up so that your kids have options. You know, if you're retiring, maybe you don't need to worry so much about what those options are if you're planning on just getting out of the business entirely. But if you're thinking about passing that business on to family, you want to know what those options are. You want to know in your LLC whether it allows you to transfer those interests, whether it allows you to put it in a trust, whether it allows you to move those in different ways. And you're probably not going to know what those are on your own. So you need to come in and ask us to review those documents, which we do for free, and talk through what it is that you're wanting to do. Because like Josh said, you have to have a plan in place. If your plan is just, I'm quitting and that's the end, that's probably not going to be the most optimal solution.
And those small business owners, they don't understand, or maybe they're not aware of, that their operating agreement can supersede their estate plan. It can say where the shares go. It can do things, and if you're not looking at that all together with your estate planning team, you're missing something. Cory Hiebert, healthcare side, any tips there from a small business owner?
Yeah, absolutely. The biggest thing from the small business owner perspective is, even if you have the healthcare figured out for yourself or your employees, it's important to know the concept of creditable coverage. If you plan to delay Medicare past the age of 65, you do have to have creditable coverage, meaning your coverage is equal to or greater than the coverage that Medicare alone is willing to give you. And if your coverage is not creditable, that could leave you in a position where, even if you still want to provide insurance for your employees, you can be forced to take Medicare or face late enrollment penalties later down the line.
And so many things to consider there. Taxes, estate planning, health care considerations, investment things.
And in the question, we're talking about an intentional retirement. Sometimes people don't intend to retire, but they do, whether that's because of changes in their living conditions, you know, they're ailing or something.
The economy, their business goes under, they have unplanned retirement.
That's right, or they pass away, and then the heirs are left picking up all the pieces. And I know, I mean, we've talked about it on the show before when that goes bad, and it's important about having that plan in place, not someday in the future when I'm going to put some thoughts of retirement, but yesterday.
And so, you know, when you have issues that you thought was planned out in retirement, or you thought you had a planned out retirement, it can feel like being lost in space. Great show, by the way. Having very little room for error, any mistake could be your downfall. Market Advisor Group, we're here as a team to help you. When distress comes calling, call us or help us prevent even being in distress. If you'd like to set up a 15-minute introductory phone call with the team here at Market Advisor Group, reach out and schedule that 15-minute chat with us by calling 833-MAG-REPORT, or that's 833, the letters MAG for Market Advisory Group Report, or you can go over to our website at eyeonretirement.com. And you can go there and you check out past episodes, or you can even search for retirement, eyeonretirement.com, about said the radio show, Retire Hour, on YouTube, where we answer more questions and highlight common pitfalls in retirement. That's all the time we have for this episode. I'm filling in for Rick Everett. I'm Matt Goolsby. Thank you for tuning in, along with the entire panel here this week, reminding you that we're all here to keep an eye on retirement.
Unless otherwise indicated, all client and prospect names mentioned on this show have been changed to protect the identities of the individuals discussed. Investment advisory services are offered through Foundations Investment Advisors LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns are not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. Legal services are offered by Eidelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not in any way refer to investment advisory products. Rates and guarantees provided by insurance products and annuities are subject to the financial strength of the issuing insurance company, not guaranteed by any bank or the FDIC. The guest commentators featured in this show are not investment advisor representatives of Foundations and do not provide advisory services. Market Advisory Group does have several investment advisor representatives that can provide such services. This is not endorsed or affiliated with any U.S. government agency, the Social Security Administration, or associated with any federal Medicare program. We do not offer every plan available in your area. Any information we provide is limited to those plans we do offer in your area. Please contact Medicare.gov or 1-800-MEDICARE to get information on all of your options. A Roth conversion may not be suitable for your situation. The primary goal in converting retirement assets into a Roth IRA is to reduce the future tax liability on the distributions you take in retirement or on the distributions of your beneficiaries. The information provided is to help you determine whether or not a Roth IRA conversion may be appropriate for your particular circumstances. Please review your retirement savings, tax, and legacy planning strategies with your legal/tax advisor to be sure a Roth IRA conversion fits into your planning strategies. All rights reserved.